Good afternoon, everybody in New York, and good morning here in sunny California, and sweet dreams to our team in Indonesia right now. I'm Frank Ingriselli, President of Indonesia Energy Corporation, and my plan today is to give you a presentation. I'm not going to go detail by detail on the slides, but I think that what we want to drive home is that Indonesia Energy still continues to be, we believe, a compelling investment opportunity, especially in today with the recovering oil and gas markets. Here's our cautionary statement. And let me just jump right on in. We put here, it's the right place at the right time. I believe that's true. It continues to be true, and even more so with the improvements in the markets today. We completed our IPO for Indonesia Energy a little over a year ago, December of 2019. We are a low cost and we believe a high value production and development assets is what we have. With our Kruh, we have two assets, and we're going to get into details with these, but this is sort of the highlight here and the headline. The Kruh Block, that's one block, 63,000 acres onshore Sumatra. Our plan, and we want to reiterate this, and more activity has been done since our previous announcements, is that we plan to increase production and cash flow by over 400% over the next 12 months and drive down production costs to below $20 a barrel. We've already achieved this. We expect that with these wells, we will drive that down, and giving you a perspective. Here we are today. I see Brent oil prices, which we're priced at, is over 50, I think I saw it here today, over 56, about $56 a barrel. That's a great improvement to the 20s that we had earlier this year based on COVID. So a $20 production cost and a $55 barrel of oil Brent. That's quite a good margin to operate with. Much better than any of these companies in the United States that are shale producers and need probably $40, $45 to break even. So that's the advantage we have. Our plan as of today is to drill 18 wells over the next 3 years. 5 wells in 2021, 6 wells in 2022, and 7 wells in 2023. And as I mentioned, those wells just from this calendar year, 2021, should increase our cash flow and production by over 400%. We've already started work since the last time we made a public announcement on development plans. Site preparation has been mostly completed for the next 3 wells. We picked the location of those 3 wells, and we anticipate to start drilling in this quarter of 2021. Was slightly delayed. We expected to be drilling in 2020, but because of COVID, it's been difficult to get some of the last permits. We've gotten almost every one except for a forestry permit, which we expect will happen soon. But we've done everything else. We signed the rig contractor, so we're ready to go once that approval, which should be momentarily, happens. And we're going to commence appraisal and development activities in our massive 1 million acre de-risked Citarum Block. More to talk about that. That block has a 30-year term and is only 16 miles from Jakarta. So here's a little snapshot again. Go to our website, look at our presentation in great detail, but these 2 outlines in green and red are the area where our 2 blocks are. Our Kruh Block is on the island of Sumatra, you see there in green, and the island of Java is where our Citarum Block is located. So, I'll talk a little about in the next 2 slides, but not in detail like this is, about Indonesia. So stepping back, I think most people don't quite appreciate the rich 50-plus year history. It's actually over 100 years, but of the core development of the oil and gas industry in Indonesia has really been over the last 50 years. Indonesia today is the 4th largest country in the world, following China, India, United States, and then Indonesia. It has been growing at a GDP growth over the last 11 years of over 5%. These are in these slides here. It has investment grade securities. It has transparency in terms of its legal and fiscal regimes. Again, every company in the world, major company, has been operating there and has tested the system successfully. So it's a country that is also the largest in Southeast Asia. I think it's the 16th largest economy in the world. And as a perspective, I've had 41 wonderful years in this industry, the oil and gas industry. Started my career at Texaco. I was rose to be president of Texaco International Operations. I was president of Texaco Technology Ventures, but most importantly, I put together very important core assets that I negotiated for the company over that 23-year career that I had there. But when I exited Texaco in 2001, Chevron took over. And Chevron, by the way, is, as I point backwards, is just about 5 miles. The headquarters is 5 miles from here. When I exited Texaco, the largest producing asset in the world for Texaco was in Indonesia, #1. And Chevron, which took over Texaco, the second biggest asset in the world for Chevron was in Indonesia. We happened to be partners. Together, Chevron and Texaco at that time, 2001, was producing 1 million barrels a day, 1 million barrels a day, more than half the production of the whole country. And, if you go to the Chevron website, you'll see that they will note there that they've produced over the term of their contracts, which was the Chevron Texaco contract, over 12 billion barrels of oil, over $1 trillion of cash flow. That's how important Indonesia is in the world economy and the world energy markets and the history of the energy industry. They were the pathfinder for production sharing contracts and the type of contracts used all around the world. So that's a message that we try to get and drive home to people, is the history, the transparency, the safety, and the opportunity that Indonesia offers. And we happen to be the only IPO ever done by an Indonesian company on the New York Stock Exchange or the NASDAQ. No other company has done it. It's just amazing. We rang the opening bell with a Minister of Energy, with the Secretary General of the country, with the ambassadors to Washington and the United Nations. That's how important this first public company is. As small as a micro-cap company you are, that's how important it is. So here we are in Indonesia, growing demand for electricity, for energy growth. Everything is growing at a 5% clip. Maybe it'll drop a little bit this year, but it's still at a very path of going forward. That's why the demand for oil is so high, and growing demand, and a mix moving towards natural gas. But we're positioned for that with our Citarum Block and our natural gas block. Here, as I mentioned, the companies, global companies that are currently operating in Indonesia. You can look at this. We've got probably logos from all the major companies of the world, all still operating and operating successfully in Indonesia, including my past company, Chevron Texaco. So let's talk about that one asset, the Kruh Block. Here's a slide of it. We have about 4 wells producing right now, probably producing about 250 barrels a day currently. That used to be, when we were up at oil prices of $80 a barrel, that kept the company cash flow even, cash flow positive even a little bit. Oil prices have fallen, but as I noted, we're up to $56 a barrel for Brent again. So, that's creeping up towards better cash flow for the company, not cash flow positive yet. But in here, we talk some details and the net reserves of the company and other aspects, and what our average production cost was in 2018. But let me go to this next slide. This is really the slide that drives home the value proposition of Indonesia Energy. If, without giving you the exact numbers of where our revenues will be, where our net cash flow will be, and items like that, you just take a look at this slide and it gives you the answer to those questions. You just got to take out your calculator on your iPhone and figure it out. So here we are. I already mentioned we're going to drill 18 wells over the next 3 years, but 5 wells this year. Each of those wells, these are just conventional wells, straight vertical, no complicated horizontal or fracking going on, no fracking, no horizontal wells. This isn't the complex shale industry. This is why Chevron has produced 12 billion barrels and $1 trillion of cash flow. This is located in Sumatra, and that's where Chevron, Texaco, produced most of their oil. So the depth here is only 3,300 feet, so pretty shallow wells. We mentioned before that production costs are about $21 a barrel right now, but we should drive those down as we complete these 5 wells this year. The cost to drill a well, only $1.5 million. And we've taken a lot of steps to prepare the site to start drilling the first 3 back-to-back wells. And we have the drilling contractor, and I believe that we will certainly meet that cost of $1.5 million to drill. Decline rate, 21%. Some people might say, oh, wow, that's a big number, 21%. You know what? That's a low number. If you go again, and I was post-Texaco, I founded and started 2 oil and gas companies, brought them both public and onto the New York Stock Exchange. And if you go look at my last one, Pendopo, or any of the other shale industry players, the decline rate on those shale wells in the United States are probably like 80% the first year, 80% the first year. So this is a very good number, 21%. Over on the left, it tells you 63,000 acres. And the most important thing is like initial production, 191 barrels a day, based on experience of what we've done already. So here we are producing, let's say, 250 barrels a day. We drill our next well. Let's just say we drill it in March. We finish it on April 1st. And we announce that initial production is at 190 barrels a day. Well, that announcement almost doubles the production of the company. So you can see the milestones to be hit. Next well, the first well in 2021, doubles production and cash flow. Second well completed, doubles it again. Third well, doubles it again. So that's the kind of milestones we hope and anticipate to make this year. Well, what kind of cash flow, what kind of return on investment does this asset give? We break it down here, and actually now this looks like almost a conservative numbers, because when we put this slide together, oil was at about 30-something a barrel. So I used here, as you see the bottom left corner, $39 a barrel scenario and a $49 barrel scenario. So let's look at the 49. We're at 56 right now. So what this tells you, that one well costing $1.5 million will have net revenue in year 1, first year, of $2.6 million. But more importantly, the first year net cash flow is $1.3 million. At $56, I can go and look at those numbers, but I'm sure that number, net cash flow, would be at 1.5 or more. So here it is. I'm telling somebody that, you know what? The company we want you to invest in, that we think is a compelling investment opportunity, is going to drill 5 wells, each costing $1.5 million to drill. And our net cash flow after 1 year is going to be $1.5 million or more at today's oil price. That's a pretty good investment opportunity. If I was going to invest in a company, they said, you know what, first year you're going to get back in net cash flow the value of the amount of money you spent to drill that well. Great opportunity for the company here, and a compelling asset that really drives value. So we're just not going to stop with 18 wells after 3 years. We're going to continue to drill and just take this cash cow of an asset that drives the value today of the company, the value proposition of our company. Now let's talk about our Citarum Block. We call this block a de-risked block. And the reason we call it that is, I'm going to come right back to this, but I believe the next slide here shows, yeah. So there's a company in Canada called Pan Orient. This Pan Orient drilled 4 wells, gas wells, several years ago. But with that prior oil and gas crisis, they were on the brink of bankruptcy. They couldn't extend the contract. So even after they drilled 4 successful gas discovery wells and spending over $40 million, they had to withdraw. What a great opportunity. Our team came in and acquired in a competitive bid this asset. But let's go back to it here. You see on the right box, that sort of shaded pink area, that's the 1 million acre block, Citarum. What's significant about it? Well, number one, it's 1 million acres. And giving that as a perspective, 1 million acres is 27 times the size of Manhattan Island. That gives you a perspective of the size of that asset. It's enormous. It's the kind of asset that turns major companies' heads. And so we want to turn their head when we drill our successful wells. But another compelling thing is you see there above it in the top left, Jakarta City. Jakarta is the capital of Indonesia. As I mentioned before, in the top left you can see this is located on the island of Java, and we're only 16 miles from the capital city, Jakarta, probably 20, 30 million people. And of course, a place where there's a huge amount of demand. This is a natural gas asset. So the government has announced that they want to move to a more aggressive move from oil to natural gas. They're currently importing LNG, and the cost of that imports are very, very high. So, you know, what's one of the value propositions here? In the US, I think that natural gas is about $2.50 an MMBTU. What we'll be getting here on the same unit measurement will be about $7. So you're talking 200% higher price for natural gas here in Indonesia. So a great opportunity. We're going to be doing some G&G work. We actually already did some G&G studies that we already submitted to the government just recently. But we're going to continue. We're going to do some 3D and 2D seismic on this asset and hope to drill, probably not in this year, maybe the first quarter of 2022. It's going to take some time to get the exact locations, probably will parallel the prior discoveries made. So an enormously great asset. But what's important in natural gas is how do you move it? It's not like oil where you have pipelines that are easy to load into, or even trucking it or whatever, and it's easy to move around. Natural gas is a little more challenging. So what do we have? Here's a very busy slide, but just look at the left side, the left corner, bottom corner. You see all those lines. You can look at it when you get this and look closely. You can see it shows you where the gas fields are. The gas is onshore. These are all, our fields are all onshore. The blue there is offshore. And you can see a lot of the fields around us. It's a natural gas play here. But importantly is there's a lot of infrastructure in place. There's a lot of gas pipelines that go to commercial vendors and other people that are near Jakarta City and elsewhere in the country, in this island of Java. So infrastructure in place, infrastructure getting more built. Met with the Minister of Energy the last time I was in Indonesia, and you know, he committed that they will be continuing to build these natural gas pipelines, not just because we have our Citarum Block, which we'll be drilling next year, but because all those other natural gas fields here, it's all part of their country plan to move more to a natural gas mix. And that just puts us in the perfect positioning. I mean, this asset is going to cost, the wells are going to cost, you know, 3 times, 4 times the cost of our wells on that Kruh Block. But each of these wells will be much more economically commercial. And this is what turns the heads of the major companies. From down the block to Chevron, to Shell, to Exxon. That's who, after we drill a few discoveries, our intent is to go out and do what's called a farm out in our industry. Bring in a partner that could share the risk and disproportionately pay the capital expenditures. That's what's important. So it reduces our risk. We don't need to go out and be dilutive in terms of raising capital to build a 500 million, or who knows how much this will cost. I don't have an exact number, but it'll be numbers like that to develop this asset. So this is the big kahuna. This is the long-term 30-year contract that we have here, exclusive contract, owning it 100% right now. So a great, great opportunity for the company. I'll mention just very briefly here, this is a joint study that we've been doing on a block called the Rangkas area. And as you can see in the outline, it's another 1 million acres adjacent to our Citarum Block. We have a right of first refusal with completing that study. If they do put it up for competitive bid, that we can match that competitive bid for that asset. That's a great sort of optionality when you're trying to bring in an Exxon or a Chevron or a Shell, that you've got an optionality to double the acreage right next door. So an important strategic asset, potential asset for the company. Our management team, go online. I'm not going to try to read through the people here. Go online and look at it. We've got our management team. We've got our board of directors. I'll just mention on the management team, myself, I'm here in California, in Danville, California, where our office is. And the chief financial officer, Greg Overholzer, he was with me in my prior startup at Pendopo as CFO for many years. So you've got the president and the CFO right here in California. We know how to run a public company. We've done it with several of them. And that's what we're doing now. And so we will continue to do that. The rest of the team, 2 individuals, Wirwan Yusuf and James Huang. I just want to mention them because they are the founders of this company. They put in $30 million of their own personal cash and have very strong industry and government contacts and relationships in the country. Dr. Wirwan Yusuf, they are basically a monopoly supplier of all food and food products to the military and to the police, and also to some areas for the United Nations there. Complete monopoly, 100% of the market. And in the hybrid rice market, they've got about a 50% share. Think of that, a 280 million country population, and they eat a lot of rice in Indonesia. So, you know, we have a lot of capital behind us, a lot of support behind us, government and the founders of the company. So I'll sort of end it there. This just, with this last slide, tells you our operating plans to create long-term shareholder value. But again, it just reiterates, you know, our plan to drill 5, what we expect to be producing wells on that block over the next 12 months, increasing production and cash flow by over 400%. And the rest of the work we'll do. So I'll stop it there and I'll turn it over. I see Michael there in the picture, my friend Michael Heim, and I'll just do a shout out. We're going to be doing an energy panel that Michael is hosting tomorrow. I believe it's at 5:15 Eastern time. So I encourage you to go to that. I see I'm going to be part of that, and I see the other people there. It's going to be a great panel to learn what's going on in this part of the energy industry. So I'll leave it there right now. Thank you.
Thanks, Frank. I'll take over from here then, and thanks for mentioning the panel. I think it's going to be a good one. The title is Managing the Transition to a Greener Environment. We have representatives from several different fuels, so glad to have you representing the oil. I'm going to ask a handful of questions. I encourage people in the audience to ask questions as well. There's a little bubble in the lower right you can click on to type them in, and I can read them from there. And maybe I'll start with that. We do have one in already. And that is, the question is, why did the stock hit $10 on a heavy trading day back in December? So address that, and maybe just kind of address the ownership structure of the common shares.
Sure. I wish I could give you a direct answer that so-and-so bought those shares and moved that price up, but you know, we don't totally know. I mean, we had just done a conference. We had just sort of updated the development plan that we had for the company, but it was just a rocket up and then a mild coming down, actually. And I've seen that at my prior company. I've seen days that something like that happens, that there's a huge, you know, the small float gets turned around several times. We don't know, but it's always nice when all of a sudden, I think the outcome of that is it's created more liquidity in the stock. So we were trading, you know, I don't have the exact number, but maybe we're averaging trading at 10,000 shares a day. Now I think we're up to like a 50 to 100 or 100,000 shares a day. A major deal. You're talking, you know, 1,000% increase in the average volume. And that's 1,000% increase in the liquidity opportunity of our company. So that's a great deal. In terms of the float, you know, we have the 2 main insiders that put their $30 million in. They together own probably about 60%. There's been, you know, right now we have about 2.2 million shares in the float right now out of a 7.4 million total share base. So you can figure the math on that. But so, you know, we're happy that we were getting more liquidity in the stock. What happened that day? I'm not sure, but it gave us a nice little bump up. So thank you. Thank you for the question.
So obviously we touched on the liquidity a little bit there, and company size as a whole, and you spent some time talking about the history of Indonesia and the majors. So how does a company of your size be able to get a nice block like Kruh when you've got so many active major companies there?
Sure, that's a great question. You know, I'll put an analogy a little bit of, think about in the U.S. and the shale industry. So here you were with the big major companies, Chevron, Exxon, and others in the United States. They didn't really pay a lot of attention to some of these small shale opportunities. When the shale revolution took place, it was really driven by the small, independent, micro-cap, mid-cap kind of energy companies in the United States. They could act quickly. The farmers in the United States that own the land, they said, you know what? If Chevron gets it or Exxon takes that asset, they're going to sit on it and maybe not drill it. That company, like my old one, Pendopo, we got assets like that and we drilled them. We drilled them right away. So, they wanted them to come in. So here we are in Indonesia. So the Indonesian government has seen the oil production drop dramatically over the last 20 years. Chevron Texaco, which I mentioned was producing 1 million barrels a day, they're at maybe 250,000 barrels a day. So it dropped. These wells won't last you much more, these assets in these fields, much more than 50 years. That's a lot of years. So declining production, the government made some incentives to encourage smaller entrepreneurial companies to come in, sort of modeled like the U.S. and the shale industry, to come in and acquire these smaller assets. I mean, Chevron's not going to acquire a 63,000 acre asset that maybe you can drill 50 wells on, producing 200 barrels a day each. It's just too small of an opportunity. They're looking at a block like our Citarum Block. That's what they'd be looking at, but not small assets like this. So this is what's driven a lot of entrepreneurial companies like ours to go after these assets and develop them. And so that's really where the opportunity came. And we're looking at others. We're looking at other opportunities that would complement this Kruh asset. Again, we want to stay focused. I've learned with 2 startup companies that what's very important and critical is to stay focused and deliver on your development plan that you put out there to the shareholders. That's how we're going to stay focused. But you can't put blinders on and not look at other opportunities. So the government brought a lot of entrepreneurs in, similar to what happened in the shale industry here in the United States. But very good question. Thank you.
I hate to go into hypotheticals, but you kind of open up the rabbit hole there when you said that you would be open to other opportunities of acquisition. Yeah. How would that work from a financing point of view? You kind of financed this planned drilling for Kruh and maybe even a little of Citarum by doing the partial IPO. Yeah. How would you address if you did another similar size acquisition?
Yeah, sure. One positive is, people always wonder what's the benefit of being a private company, a public company. One positive aspect of a public company is you've got public stock. You don't necessarily have to go out to the, I was going to say the Goldman Sachs. I don't know if we're quite to the point where Goldman Sachs is going to help us make another acquisition of $20 million. But, we don't want to go out to, you want to avoid, dilution the best you can. And so I know issuing stock could be dilutive also, but it's a way that you don't have to go and incur all these big expenses. So, that's a possible way to finance it. We don't have anything right now. There is no opportunity asset that we're looking at or negotiating on right now. But if there is, we have to take a look at it, and to raise the capital maybe would be the best way is being as a public company, assuming the other company is it doesn't matter if it's a private or public, they would take stock in our company if we think that it's accretive to the company and delivers more value to you, the shareholders out there. So that's what we would do.
I can jump back to the liquidity question, and you kind of talked a little bit about the ownership. What would you say to somebody who is worried about liquidity in terms of the ownership that Dr. Husif and Mr. Huang have, in terms of how stable is that ownership?
Well, that ownership is, in terms of that ownership is extremely stable. They didn't get into this to flip the company and GANA. They got into this, and their face to the government is to build this company into a successful company, a positive cash flow earnings company, to do proud to Indonesia and the Indonesia Energy and some of those other entrepreneurs that are developing fields out there, that we did it right, and they want to get the compliments from the government there. We can go into Indonesia and meet with the Minister of Energy just when we show up there. That's the kind of relationships we have. If all of a sudden they try to do something like sell shares or anything like that, their reputation will be damaged. And this asset, they've got a lot of other more important capital investments and commitments into Indonesia. They would never want to have those hurt. So this is something the government is supporting. This is something they sent their highest government officials to ring the opening bell with us. They have a long-term commitment. They don't need to sell this because they need to pay for their family or whatever. They are very, very wealthy, and this is something they're proud of, and something that they want to have as a family legacy and history, that the success of this company.
Okay, let's jump into the operations a little bit here. You talked about the delays in the drilling and Kruh, and certainly understandable. And the last verbiage I think you heard you say was 3 are selected, everything signed up first quarter. And then I thought I heard you say something that I know might have just been hypothetical, but say it's online April 1st.
Yeah.
Is that making a comment about the timing, or just kind of being a hypothetical since we're saying first quarter?
It's probably 50-50, I think I know things, it's hard to sit here and say things are getting better on COVID, but I think people have learned how to live with it. People have learned how to do business with it. We've been able to do conferences like this virtually. It's created new opportunities and new ways of doing business. So I think in Indonesia, they're starting to get more back to normal in this new normal world, and vaccinations are taking place in Indonesia now. I do see, and I'm very optimistic that this last little bureaucratic delays will come through soon, and we'll be able to start drilling and have production from that first well by April. So,
well, it certainly
I feel more I'm more optimistic and more confident of that scenario.
I was going to say, it certainly hasn't hurt you with oil prices rising for the delays.
Great time. We got to get those wells started to drill and make that cash. Yeah, it's a whole bringing back to what we first anticipated as a company.
So at this point, what's stopping things from being done tomorrow?
Yeah, so the only thing stopping it is just getting this one forestry permit, which is really a no-brainer. So when you think about it, we've already have 4 wells producing right in the area. So it's because some of these government agencies have gotten backlogged, and they didn't show up at work. They're working virtually. They're not quite as efficient as the United States is. I wouldn't give us kudos for a lot of things. I wouldn't say we're the most efficient in the world. I think other countries are handling the current world crisis over the last 11 months better than we are. But they're getting it better, and it's just we can't do it tomorrow because we really need that. We need that permit. But I know it's actively getting close. So.
Okay. And you've talked about 18 over the next 3 years. Why 18? Is that just kind of 3 years as a focus, or could be a number that could be much higher?
It is a number that could be much higher. This is sort of what we're committing to right now, that we put a plan together in terms of paying for it and financing for it and things like that. So, we think we could support that very easily. Nothing is easy, but very comfortably that we can support something like that. So we're, that's a number that our development plan is currently. We could change that. If we change it, our intent is to change it upward, not downward. And, we've got a lot of runway there. So.
And that's a number that you can finance internally from the wells as they come on?
Yeah, I think with the pricing that we're getting right now, we probably could. It's not to say that we won't go into the capital markets. We will look at, we'll do what every company does, to look at the capital markets and look if we need to, or if that money can be used for a much better return than the cost of the financing or the cost of a dilution. We won't raise money except for accretive purposes, and accretive means we're going to deliver more value than the cost of the capital. So that's our plan.
How about the Citarum Block? If you jump into that, if you said 2022, that's an even more major jump in terms of CapEx.
Yeah, with that, I would expect that to do that, to drill those wells and to start the big work there that we do have to get, raise some more capital. And so, it leaves a very good opportunity. It's not a dilemma, but it leaves a great opportunity because, do we just go out and try to sell 50% of that asset right now to Chevron or down the block or to Shell or to Exxon? Or do we drill out of our own capital, even if we have to raise some, drill a few wells, and then get, 200, 300% more for that asset because of the discoveries. So, we want to add value to that asset and then bring in a partner for capital to cover our capital after. So, I would expect that we'd have to raise some capital to finance that. But, when you're doing that, well, let's say we got to do that starting in 2022. We're exiting 2021 with now 5 more wells producing at 190 barrels. It actually will average about 170 barrels for a 12-month period. So, we'll be exiting a year at over 1,000 barrels a day, very good cash flow. We expect that would deliver shareholder value, deliver a better value than we are right now at undervalued, and a great investment opportunity. And, raise capital at that point to drill wells on a gigantic, enormous elephant opportunity in Citarum.
And you're in a pretty decent cash position right now following last year's IPO.
Oh, yeah. So, with oil prices jumping up to 56 right now, so even the current production of, 250 or so barrels a day is very valuable. At that extra increase, we watch our G&A expenses, other than when we did our capital raise, they're pretty low. And, we're going to keep it that way. We don't need to add on more people as we drill these wells, maybe a few more, but not a lot more. So we're in good shape with that.
Well, I'm getting the knock on the door that we're down to our last minute here, so I think I'll just take it to thank you for participating and letting us know a little bit more about your company and Indonesia as a whole, and also reiterate what we talked about earlier, the panel tomorrow afternoon. And if you're interested in this company, tune in and learn a little bit more there.
Great. Well, thank you, Michael. Thank you, everybody. And it was a pleasure and a privilege to speak to you today, so thank you.